Ladies and gentlemen, as we stand on the brink of a new exciting era, the role of emerging technologies in shaping the future of global investments cannot be overstated. From artificial intelligence and blockchain to the Internet of Things and 5G connectivity, these technologies are fundamentally altering to the landscape of how investments are made, managed, and grown across borders. Please join me in welcoming Mr. Ayman Al-Tambouli, co-founder and CEO of Exits MENA.
Hello, hi everyone. Allow me first to welcome our esteemed panelists to the podium. Mr. Abdullah Jeffrey, Senior Regional Manager of IFC for GCC. Ms. Hanan Al-Ahmari, FDI Specialist at Startups House. Dr. Muhammad Al-Radi, Founding and Managing Partner of Seam Labs. And Mr. Sharif Tawfiq, CPO of Microsoft Middle East. All right, I think it's about time that we start. It's about time that we start. Distinguished guests, esteemed colleagues, welcome. We stand at fascinating crossroads where the rapid advancement of emerging technologies is fundamentally reshaping global investment, particularly foreign direct investments, which is the topic of this panel. Our expert panel will delve into the profound impact of innovations like AI, blockchain, robotics, and sustainable technologies on the FDI radar. These advancements are creating new opportunities, disrupting traditional investment patterns, and presenting both exciting possibilities and complex challenges. The influence of technology on FDI is significant and growing. Cross-border investment in the digital economy and technology-driven sectors has been substantially increasing, representing a notable share of global FDI flows. Investments in R&D and innovative startups as an example of key drivers to that growth. This panel will explore these trends and how we can navigate this evolving landscape. Please join me in warmly welcoming our distinguished panelists. And please, if each panelist can very briefly introduce themselves before we get into it. Abdullah, تفضل يا باشا.
Thank you very much. Welcome everybody. My name is Abdullah Jeffrey. I'm the regional manager covering the GCC countries out of our global hub here in Dubai. For those who don't know IFC, IFC is the private sector arm of the World Bank Group. We're the world's largest private sector multilateral development institution. And we invest and provide advisory services on empowering and enabling the private sector in emerging markets. Thank you.
Thank you, Abdullah. Hanan, please.
Hi everyone, my name is Hanan Al-Ahmari. I work in the Saudi startup ecosystem, helping foreign investors and early stage companies in entering the markets and ecosystem access. I'm here to share what we have learned on the ground, and that's it.
Muhammad Bash.
Hello everyone, this is Muhammad Al-Radi, investor and managing partner at Seam Labs Venture Builder Fund, where we invest and exit in enterprise software companies across the region, solving for the $20 billion enterprise and work inefficiency gap. Glad to be with you.
Sharif.
Hi everyone.
We're very loud. Yes, that's the spirit.
I hope everyone is still excited, energetic at 4:15 p.m. Sharif here. I lead AI and emerging technologies partnership for the region for Microsoft. I also wear another hat, which is the CEO and co-founder for Fusion Minds AI, which is a startup that tackles sustainability, AI, and scaling for the region.
Thank you, Sharif. I think we're good to go. My first question goes to Abdullah. Abdullah, you mentioned the role that IFC plays. You mentioned the impact of their investments globally, but with a lens or a zoom in on FDIs in the sector of technology, what role does IFC play in enabling growth for tech startups and digital economies in emerging markets?
Thank you, Ayman. This question points to the key role of IFC in empowering and enabling the private sector in emerging markets. Now, obviously, the main impact that we have is through providing capital. We invest from our own balance sheet into all the sectors in the private sector, including technology. But our role goes beyond that. It's not only the capital that we provide, it's also the capital that we mobilize. So capital mobilization is our most impactful role that we can play. And usually we do that through the brand recognition of IFC. We're known to have a very thorough due diligence process, but also to have a very successful track record in investing in commercial opportunities. So whenever we're investing in a project, that usually sends a signal that this project has been, all the tires has been kicked. IFC believes that this is a good project and it has good prospects for being a commercial success. And that attracts a lot of investors, whether equity or debt. So usually we can be an anchor investor in a first bond issuance. Usually that crowds in a lot of capital. So this is the main role that we play. But beyond that, in the startup space in particular, we offer beyond capital, we offer mentorship opportunities. So we have programs where we help mentor entrepreneurs in managing their business, growing their business, raising capital, and navigating their startup through the different stages of growth. Beyond that, we also offer them access to global networks of other startups and other VC funds. So we have an annual conference where we bring all of our investees into one place and they discuss and share experiences from around the world. They connect with other investors. And last, from an impact perspective, we also provide advisory to governments on policy reforms. We want to ensure that the environment enables startups to be registered, grow, and raise capital. So there are a lot of programs, especially we have a lot of interventions in Jordan, Tunisia, and Morocco in the region on modernizing their systems to allow for startups. I would add 2 points to that. So usually we provide early startup capital, especially in challenging markets. So markets where there's a dearth of capital available for startups. This is where we operate the most. As everybody here knows, access to early stage capital is abundant in OECD markets. But in emerging markets, especially with high risk markets, this is very challenging. So we provide capital there, but we also provide de-risking tools. De-risking tools is we have access to concessional financing to help lower the risk in markets where the return risk balance doesn't work. So we help bring that concessional finance to lower the risk and make the risk reward balance work. This is a key role that we play. And the last point, which is very relevant to what's happening today, is we're counter-cyclical. Our role becomes very prominent when the economy is suffering. So you usually find us very active during COVID, during the during the 2008 crisis. And this is a period of time where the markets are experiencing turbulence. This is where our role becomes very important and key. I'll stop here.
Thank you, Abdullah. One last remark here or question pertaining to IFC's role is that the idea of impact investments in general is not something that most of startups are familiar with, either in terms of what criteria do I need to follow to be able to tap into impact investment, and as to how to measure impact in general, pre and post investments. So what is IFC doing in that regard in raising awareness as to how this can be done?
So this is a good question. When we invest in a startup or in a technology company, obviously the first priority is the commercial success of the company. But as IFC, my role is to make sure that there is an impact coming out of that growth. So you should not focus only on growing your profitability, but it's great to be able to generate jobs. The more jobs you create, the better of an investment this is. Addressing underserved communities. Anything that we can do to help reach services to underserved communities, offer opportunities to minorities that find difficulties accessing services or jobs. These are the angles that I try to bring into the investments that we make in these markets. We measure impact through a tool that we designed in-house, but is used by other development institutions around the world, which assigns a score for the impact of each project. At the investment stage, we determine the score that is expected of this project, and throughout the life, I measure the IRR of my investment, but I also measure the impact relative to the score that I set at the beginning. In the market, it's known as a triple bottom line reporting. We have our own tools to measure that.
Thank you, Abdullah. This is very informative. I hope there were more startup founders here to listen to this. Sharif, moving into the corporate side of things. I mean, you're coming from a tech giant, Microsoft, and you're yourself a startup founder. So as reflecting on both capacities, as a CEO of Fusion Minds and as the CPO of Microsoft Middle East, AI has been deeply involved and relied on in innovation. How do you see AI driving new investment opportunities and transforming traditional industries, perhaps even within the tech space itself?
Thank you for the question. I think for us to understand what's happening now, let's look at the history. And I was having a chat with Abdullah just before the panel, and we made analogies to the early 1900s. If you remember, I'm pretty sure nobody remembers, but if you read history, the world was reliant on horses, big time. Horses for transportation, horses for moving things. Horses was basically the main foundation of so many economies. And for transportation, horses that used to pull carriages was the main thing. And then early 1900, the cars and the automobiles started to come. If you would look at what happened that time, you would conclude that yes, cars would rise, horses would die. Okay? And then with cars, there are the associated technologies. Okay, there are the tires, the oil that requires to drive those cars. But you wouldn't have imagined, for instance, certain industries to emerge like the logo industry. If you go back, in horse-driven carriages, when you put billboards as advertisement, you don't need to go to memorable pictures for you to remember a brand. You just need to put a text. People have time to read through the text. But because of the cars, now the billboards is not effective anymore by just putting an advertisement as a text. So you need a logo for you to remember that, yes, this company has this picture. And a logo industry was produced and all associated creative around that. So we are at this horse to cars moment today, whereby AI is taking over. Make no mistake, AI is really a transformational technology. But when you think logically, you would say, okay, AI, companies that are into AI, and then foundation models that is powering AI, and then the chips that is powering AI, and then the data center, and then the power. All of those would definitely rise as investment opportunities. But also at the same time, there will be other emerging technologies similar to the logo industries that will come and change the whole idea of how to perceive the current world, like quantum. We've heard the number of quantum has been there since forever, but the number of occasions that in the last year we've kept hearing quantum is also very, very, you need to pay attention, because this will be another technology that will revive because of AI, big time, and it will change also the course of the industry that we have. Any other conventional industry like healthcare, like education, like even law firms, if those industries do not adopt AI first, they will eventually there will be a Kodak moment. You remember Kodak, when they didn't adopt digital photography, Kodak did not continue. So I think now we have industries that needs to adopt AI quickly. Either there will be a Kodak moment for them. So it's very important to look and take care of what would be the industries that will rise because of AI, what will be industries that will die, and what will be the industries that will be produced because of that.
type. Going back to Microsoft, don't you think that there's like some sort of an AI war? There is a rush to develop rather than there is a rush to develop an AI solution rather than developing a proper AI solution or an extremely useful AI solution?
I think if you look at where we are today, Ayman, I think AI is a platform. What Microsoft and the others are doing now is developing AI as a platform, similar to the internet, similar to the PC. So yes, now there is a platform war for sure. He or she or which company that will at least have as much as possible their platforms used in different applications of AI, it's definitely a race. However, we don't believe a winner take all. Most of the hyperscalers, you will find them acknowledging that this is a war that will not be won by single platform providers. So I think what we want to be is to be a relevant platform for AI solutions providers, developers to adopt us part of the platforms that will be available. And I think the more the merrier, because you create competition, you push costs down. So I believe, again, there is no winner taking all in this war, but you will find lots of people trying to be relevant in a platform game as opposed to a solution game.
Yes. But putting that in the context of investments, I mean, Microsoft is a conglomerate. They have businesses and investments across the globe. Yet there is always that struggle between developing something in-house and investing in a certain region or in a certain business or vertical to develop that. What is, like, in a nutshell, Microsoft's strategy in that regard, and how does that link to their investment strategy?
I think we started to look more into partnerships. And again, one of my main roles here is to take care of the G42 partnership that we've announced a few months back, actually close to 1 year back. We decided to invest $1.5 billion in G42 as a group. And with that, there is the obvious FDI that this brings, where this is a capital that we're putting into G42, an Emirati-grown company or group of companies. But more important than that is the catalytic effect that this partnership will bring to, first, the regions that this partnership will take care of. A few weeks after the announcement, we announced the Kenya potential announcement for a data center in Kenya. That's because of the partnership between G42 and Microsoft. So we're bringing a hyperscaler into Kenya. The talent that will start attracting to the region, because on the back of this partnership, we announced an R&D center in Abu Dhabi, an ethical AI center in Abu Dhabi. This will attract talent, hires. Those talent eventually will leave Microsoft and then will open their own startups or will work in other companies that bring more and more catalytic effect. And third is the market-making opportunities and announcements. Case in point, Abu Dhabi government announced to be one of the first AI-first governments on the back of this partnership. That would also have another catalytic effect in terms of attracting startups and companies that wants to serve Abu Dhabi government because of that, and hence, again, and more flywheel effect of investments coming to the region.
Many thanks, ya Sharif. Reflecting on G42, I think that gets us to Hanan. Hanan, you've of course heard what Abdullah has said as a reflection as to how DFIs can support startups. What Sharif has mentioned as to the degree of Microsoft's participation. From your side, how to make startups attractive? How can governments, institutions like Startup House support the development of a robust startups ecosystem that attracts these investments, while in fact still maintain a certain level of protection over local innovation and a certain level of empowerment, so as not to lose the identity of how this technology or how this startup originated?
Thank you for your question, Ayman. Saudi Arabia demonstrates how multiple government entities and institutions can work in parallel to attract foreign investments while protecting local innovations. Investor access is supported through policy tools like the entrepreneur license, while local innovation is empowered through startup empowerment, IP protection, and regulatory alignment. In Saudi Arabia, foreign investment not seen as a trade of local innovation. In Saudi Arabia, FDI is not treated as a trade of local innovation. It's seen as a way to accelerate it. And in my experience, the most effective regulations, the one evolve with the startups. That's how government move from being gatekeepers to becoming a true enablers of innovation.
طيب, reflecting on that, I mean, and shedding more light on what Startups House does. Can you please like give us an overview of what they do with the aim of not just empowering the startups or facilitating what they do, but actually having them bankable and investment ready to attract foreign investments? Like in a nutshell, what does the Startup House, what is the Startup House mandate in that regard?
Can you repeat your question?
What is the mandate of Startups House in that regard?
We help investors and early stage companies to enter the market, especially with the regulations and ecosystem access. We also connect them with local partners and giving them a safe space for testing their projects and innovation in the local markets.
All right, that's great. Thank you. طيب. Last but not least, Dr. Muhammad. Dr. Muhammad, you're an investor who has a proven track record of tech cross-border investments. And you have, we have this angle of not being a simple silent investor, but more of a venture builder. Someone who gets the startup not only through funding, but through technical support from point A to point B. What key factors do you look for when evaluating such early stage tech startups, mainly in MENA region? And what do you think of while enhancing their bankability to foreign investors, either as a subsequent fundraising round or hopefully an exit at one point?
Yeah, those are great points to discuss, Ayman. Thank you. So when it comes to early stage investing, we look for a couple of parameters. We can call them the trio: problem, product, market, and the team. So when it comes to the problem, of course, you want to go after big problems, very clear crisp problems that can impact millions of users, and in dollar value, they will create somehow $1 billion market size. And you can look at the product market somehow interrelated, because you have this problem of the optimal time to market, the optimal timing strategy. So you don't want to go into the market too late or too early. So you just want to find the optimal timing entry point, because if you don't do so, those will come with some associated issues and challenges to the company. So problem, product, and market, and of course the team or the founders. We believe they must be passionate about the problem, as well as they have to have some sort of deep understanding to the problem, or they can develop quickly a deep understanding to the problem. And of course, all of that comes with the foundational attributes to the founders that is part of the due diligence. So this is mainly the parameters we look for when we do early stage investing in this asset class of investment. And yeah, that's mainly about it. Ayman.
Let's take some sort of a material example here. You or Seam Labs, under your leadership, has been investing in both Egypt and Saudi.
Right.
And has been creating some sort of like very impressive, in my opinion, synergies between portfolio companies in both countries.
Right.
And has been able to attract foreign investments that, in my opinion, hits two birds with one stone, gets recorded as an FDI in Saudi Arabia and in Egypt.
Right.
How does that work?
So it might sound conventional, but somehow we build and pilot in Egypt, and we scale in the GCC. Yes. Almost this is the model, right? So of course we utilize macroeconomics in the region, across the region, so that would help, of course, with capital efficiency and so forth. And so yeah, we utilize Egypt as a pool of technical talents. By technical talents, I mean software engineers, data scientists, AI engineers, and product managers. And on the other hand, you would utilize the GCC for business functions and business scaling. So almost this is the model, and of course we attract foreign investments as long as you have legit economics and a good potential for growth in the horizon of 10 to 20 years. So this is what we are talking about when it comes to such an asset investment class, like the early stage startups. And when it comes to foreign investment, I think the region has witnessed very solid and notable cases like SoftBank investing in Kitobi here in the Emirates, right? And PayPal and MasterCard investing in Tabi in Saudi Arabia. And of course the famous case of Uber acquiring Careem and so on. So all of these are good examples that we have attracted foreign investors to the region, and I think foreign investors are now they are not in discovery mode for the region. I think they are more into the region became more strategic to them at this point. Yeah.
Great, thank you so much for this elaboration, Muhammad. I think we have 2 minutes left, so if any of the esteemed panels have any closing remarks, 30 seconds each, that would be brilliant.
No, thank you. I think this discussion is very timely. As markets turn down and capital becomes more scared of the turbulence that's taking place in the world, mobilizing capital and finding ways to attract investments in this market can be very challenging. So it's important to realize that this is the time to really find good investment opportunities. Everything is available for investment at a good price. But the impact out of that must not be forgotten. Because with frightened capital, you get jobs lost, you get declined economic output, you get real impact that usually hits the poor the most and the lower income brackets the hardest. So all of these efforts are very timely. Thank you.
Thank you. Please.
We are no longer asking if the eye will come. We are now shaping how it arrives and who's ready to receive it. Saudi Arabia is proving that innovation isn't just a trend, it's a national commitment. So let's make sure that our startups are not just present, but prepared for the next global FDI wave.
Thank you, Hanan. Dr. Muhammad.
Yeah, sure. So I think building on Abdullah's point, so I think private markets flourish on the top of public markets challenges. So I think it's time for founders to double down on this and focus on big problems and make sure to not overlook the classics. I mean, profitability and financials. Those are very important. And for investors, I would say, the caveat is just to catch on early stage opportunities, so you can have lasting positions and upside.
Indeed.
All the best.
Thank you, Bash. Sharif Bek.
So if you will be investing in emerging tech, and I think you should be investing in emerging tech, I think select emerging tech providers who are taking ethics and responsibility into account. And I think it's very important when you think of AI, for instance, responsible and ethical AI is crucial. There are principles of responsible and ethical AI, things like fairness, lack of bias, things like being responsible, things like privacy, inclusiveness, accountability, transparency. those are very important principles that you look at while thinking into your investment decision, because I think the ethical and the responsible AI solutions platforms are the ones that will stay and will persevere the test of time.
Thank you so much, Ashraf, and thank you to all the audience, the esteemed panelists. Once again, I thank you. I hope the objectives of this panel were fulfilled. They were, for me at least. And yeah, hopefully you find it the same. Thank you.
Thank you, Aim.